Currencies were mostly higher against the US dollar on Monday, though the gains were contained and perhaps somewhat less pronounced than what might have been expected in the aftermath of a weekend that only demonstrated just how serious the US is with respect to pushing forward with its protectionist agenda. The euro got a nice lift, which helped to bolster its peers on Italian Finman comments that Italy leaving the euro was out of the question. The only exceptions amongst the developed currencies were the pound and yen, both trading lower against the buck. Setbacks in the pound made good sense, with maybe the only question here how the UK currency held up so well after an ugly batch of UK data that produced misses on trade, industrial production, manufacturing production, and NIESR GDP estimates. Yen weakness was more pronounced but also more difficult to reconcile, though if there were some things to attribute the price action to, they would have been US dollar yield differentials that have been favorable ahead of this week's Fed decision, and U.S. equities that continue to find demand as the S&P 500 tries to work its way back towards the record high from earlier this year. Looking ahead to Tuesday, the market will be focused on the North Korea summit and a batch of data that features Aussie business confidence, UK employment and earnings, German and Eurozone ZEW surveys, and U.S. CPI. That's all for now.